It looks like I've got 10 a.m. Welcome, everybody. I'm just kind of looking, a few people are logging in right now. I'll give you all a minute or so. Today, I'd like to go back and just continue the chapter 4 concepts of the journal and ledger. I have a couple problems I'd like to work with you. Based on my Monday night class, we pretty much got through the whole chapter this past Monday. It was a pretty good night. So depending on what's going on today, let me know. I think I told you Monday that the due dates in Connect are this Sunday, October 11th, for you to submit the chapter 4 assignments. And unless there's any issues today, I'm just going to go ahead and leave that due date as is. I think that's a good date. But then again, if there's something that you're not seeing with the stuff in chapter 4, let me know today. Before I start, does anybody have any issues or questions before I bring up a problem? I'm gonna go back into Connect and we'll look at the journal and ledger concept again. But does anybody have any issues, anything that I can address right now? Anything? Again, I'm looking at the class. Looks like we've had 6 people in here today, 7 people. I mean, people are just kind of logging in right now. But anything at all, let me know before I start. I'll give you a few moments to think if you have any questions about a journal, what a journal looks like, what the purpose of the journal or ledger. All right, well, if there's nothing, that's fine. But if something comes up as I'm going to go through another problem with you. And I think I have 2 problems I'm going to look at. Just, you know, either raise your hand or just send me a chat. Let me know. And I'll be glad to pause and go back over it. So I'm going to be in Connect in a minute. I'm going to go ahead and share my screen in a minute. And I'm going to be looking at problem number 8. Again, this is chapter 4 homework problem number 8. This particular problem has you do both journal and ledger. So we're going to do some journal entries, and then we're going to practice. I'm going to show you the posting. And my hope is that if this problem makes sense today, this is probably about 95% of what's in chapter 4 that you need to get. And then I have another problem. I want to talk about the concept of correcting entry. Sometimes if there's a mistake made and a journal entry gets posted into a ledger, and then there's a mistake, I want to show you how you can go back in and fix that, because that's also going to be an issue and also something you need to know for, you know, quiz and exam purposes. So before I bring that up, let me just remind you all kind of what we're doing. I'm going to bring up my whiteboard real quick, give you my little illustration, and then I'll bring up the problem. And just remember, in this chapter, I'm just trying to show you the concept because, you know, a lot of this stuff is automated when I'm talking about journal entries and ledger postings, but you still need to understand the concept. So remember, the meat of chapter 4, the concept is, remember, we are in a journal now. So we enter everything in what's called a journal. That's going to be where we record our transactions. And then once we've done that, and again, when I say record, we're going back and we're essentially applying all those rules you learned in the first 3 chapters. So we have debits and credits. And then once we've recorded those in the journal, those transactions,
I'll
tell you when, please do. And let me go ahead and mute.
I have a class. I don't want noise, please.
That way people don't get distracted. So then at that point, you go ahead and you post to our ledger. And the way the book shows you the ledger is they show you, sometimes it's a 3-column, sometimes it is a 4-column ledger. But I just want you to understand the concept right now of what ledger means. Ledger is just going to be a summary of your journal. And it's essentially, it's kind of like your T accounts. So if you can kind of visualize the T account idea where, for example, if you have cash or whatever, and you have all your debits and credits entered into that cash T account, that's essentially what the ledger idea means. But in chapters 4 perspective, the ledger is going to be summarizing everything that happened in the journal. And so remember, to go from the journal to the ledger, that concept is called post or posting. And it's simply you're just transferring the data. So, and then of course, that's the meat of chapter 4. The business transactions are the same. Those are not new. So we're kind of reviewing some of the stuff we did in chapters 2 and 3 with those business transactions. And then of course, the other idea is eventually we would then get to the financial statements, which we've actually already prepared because we did that in chapter 3 when we did the T account idea, and then we did the financial statements. But that's essentially in chapter 4 is showing you the bookkeeping, record keeping aspect of an accounting system. And all businesses, all companies have journals, ledgers. Any company you can think of, Amazon, Boeing, Walmart, they have all this. Of course, it's a bigger scale, so they're going to have that software to help them get it done, quickly and efficiently. But so that's the overall idea. I don't want you to try to memorize the way their ledger actually looks like. Just if you understand it. Today we're going to do some journal entries. I'll show you how we'll post in the problem, and then we'll see where you're at. We'll see if you have any issues with that. Now, remember the one thing, last thing I'll say, remember once something is in the ledger, whether it's correct or incorrect, it's a record. And eventually from the ledger, we will get to those financial statements. Okay, remember we got those 3 financial statements that we're looking at in this class, the income statement, equity, and balance sheet. And so the other issue we'll get to, the goals that, towards the end of the class today, is to show you what happens if you have something incorrectly recorded in the ledger. How do you fix it? Because if you don't fix the ledger, remember, it's going to end up on the financial statements, and then your financial statements will be incorrect. Okay. So, and again, I'm going to show you that a little bit later today. So, having said that, let me get this up. Let me do a new screen share. I'm going to go to the problem. I'm already in there. So let me share it. And this is problem, again, number 8. And again, in this problem, what's going to happen is we've got several transactions. This is for the month of October. And we're going to go through these. And the requirements are to journalize the transactions. So we'll put these in a general journal again. Remember, we're going to do our debit and credit analysis. And then once we've done that, then we're going to post to the ledger. Okay. So the way I think I'll do it with this class today, and I know we got the 50-minute time period. In my Monday night, since we have 2.5 hours, almost 3 hours, I did all the journal entries first, and then I posted. And I think what I'll do today with you guys is I think I'm going to post as we go, because I think it'll keep the dates and it'll keep us in the right track. So once we've done one journal entry, once we've entered it, I'm going to say, okay, once we've recorded it, now we're going to post it to the ledger. And just so I'm going to make sure I tie in that concept of posting so that you see it. Okay. All right. So let me go down. So first one here is, and you'll notice that they actually put the transaction in this little box. So notice there's actually going to be 15 entries. So the transaction description's right here. So I can just leave this right here. You can see it. And this one says Helen Kennedy invested $70,000 cash in the business. So that one we've seen several times already. So you'll note that they've actually already put the date in for you, and then you just have to do your analysis. And just like you did before, you know it's going to be cash and it's going to be capital. Cash is an asset, and of course capital is equity. So then remember the rules for accounting, they want you to enter the debits before the credits. Okay, so when I go to this problem, I'm just going to do this first one. So you got to click on the cell, and of course the asset, or I'm sorry, the account that will be debited, everybody should be saying should be cash. So I'm going to find cash, enter it. I'll put my debit of 70. So there's my debit, and then they want you to go to the second row, and then of course capital is credited. So I'm looking for the capital account, which is right there, and then I'll go ahead and enter that 70,000. Okay, and guys, that's it. That's all you got to do. That's a journal entry right there. Now, once I hit this record, so when you go in to submit your homework and work on your homework and connect, Once you do that, you got to hit this thing where it says record entry. So if I hit record entry, it's put it in the journal. It has not yet posted it yet. They're going to make us do that manually. But then notice it'll then take you to the second transaction. Okay. So if I go back to this first transaction where it says debit cash, credit capital, notice it's October 1st. So that's how you do a journal entry. And so the next thing I want to show you is the concept of the post. So I'm going to post these entries into the ledger as we go. So to do that, I'm just going to click this box up here where it says general ledger accounts. So I'm just going to kind of toggle back and forth. So we've got October 1st, we've got a debit to cash and a credit to capital of 70,000. So if I go to cash, here's my cash account. I'm going to put the date, which is October 1st. And then I'm going to put that 7,000. If I enter that right there, that's a post. I just posted it. And please notice that the balance already shows up as 70,000. So they're not going to make you calculate the balance. They're going to have that already input in there as a formula. So then the credit posting will go to capital. Again, October 1st, credit 70,000. Just like if we had done in a T account, enter the 70,000. And note that the balance account also updates. Okay. So once again, we've got general journal. There's your journal entry. And then there's your post to your ledger. Can everybody hear me? Am I coming in clear?
You clear now.
Is it better?
Yes.
Okay, I apologize. Maybe it was my volume, but yeah, let me know if I need to repeat anything. So let me repeat what I just did. So again, here's our journal entry. Okay, debit to cash, credit to capital. Notice that they also indent for you. So don't worry, I will not test you on that idea of you have to indent the credits. To me, that's just how they want it to look like, but they're going to do that for you. But here's your debit to cash, credit to capital. So that's a journal entry. Notice they've got the date. And then when I go to my ledger, I just posted this. Notice I put the account date. I did the debit to cash. That's called a post. And then it updates the balance. And then I went down to capital. And there's the post of the credit. And then notice it has the balance in there. Of course, there's the date. Okay. Think of these as kind of like your T account idea, even though this isn't a T account, but notice you have a debit and a credit, and this is for your posting, and then it's got the balance column. Okay. All right. So does anybody have, and this is just the first transaction, but does anybody have any questions or comments or issues on journal, what a journal is versus what a ledger does? Anything? And if not, that's fine. But I think you're learning that.
Could you just tell me the reason of a ledger, to do the ledger? I understand the journal part, but like if we do the journal, I just want to know.
No, it's good. It's very good. So yeah, it's a good question. So remember that the journal entry does these individual transactions. It's think of it kind of like the detail. It's the detail behind your original transaction. The ledger basically is going to mimic or copy the journal. The ledger, though, is just going to take any account that's going to show up in your journal that you're using. The ledger just takes that account and individually summarizes it. So, for example, in this first transaction, so let's just focus on cash because there's going to be a lot of cash transactions. So the ledger will have all the accounts that a business uses, and it's going to simply just keep track of any debits or any credits for any individual accounts. So eventually, when we get to the end of this problem, cash will have a bunch of debit and credit postings, and then we're going to have a balance. And that's essentially the summary. So the ledger is just the summary. And the importance of a ledger is that, and I can tell you, from experience, is that when I was in the industry field, when I worked with this stuff, I typically spent most of the time, anytime there was a question about a financial statement or anytime we had any sort of issue, the first thing we always went to was we would go to the ledger because we knew that's the summary. And then if we could not figure out what's going on in the ledger, we would then go backwards and trace it back to the journal entry to see what created that entry. And then if we couldn't figure that out, then we go and look at the source document. And sometimes you have to do that. Sometimes you have to figure out if there's a mistake or a problem. And sometimes there might be an audit. Sometimes maybe an auditor is looking at your ledger and trying to figure out just exactly why did you put that into your ledger. Because remember, from your ledger, eventually you get to the financial statements, okay? And this is very important stuff because these are official records of a company. And companies have to keep this stuff for several years, even after financial statements have been prepared. And so sometimes what happens is you have internal audits at a lot of companies, internal audit departments. They would go in and they'd look at specific accounts and they would audit different balances just to make sure that everything is legitimate. This is how, by the way, I can't remember if I mentioned this in this class on Monday, but company I worked for, one of the companies I was at a couple big companies. My boss, and this was later on, I found out after I'd already left the company, but my direct supervisor had been embezzling money from the company. And essentially the way they caught it is that the internal audit department was doing an audit on an account in the ledger. They went to the ledger, and I believe it was an accounts receivable account. The company had several account receivables, but they went to an accounts receivable and they looked at the balance, and they went from the accounts receivable, they went back to the journal, and then from the journal, they went to the invoice that created the journal. They call it the source document. And they had determined that there was fake invoices being paid, and that fake company was what my supervisor had. He had made up a company where he literally had the company write him checks to his bogus company, and they sent these checks to a P.O. box at the post office, and eventually they had to get a federal warrant, and they got into the box, and they had to get the ownership of the P.O. box, and they traced it back to my direct supervisor. He was literally sitting. He had been promoted. He was an executive at the time. He had been promoted up to a Salesforce, so he was actually out of the accounting department, and he was literally just sitting at his desk one day, and the cops and the police, they showed up, and literally he was booked and arrested on the site, fired immediately. It was unreal. I wasn't at the company at the time. I'd moved on to a different company, but I had talked to some of my former coworkers, and they told me everything that happened. And it was just unreal. But just to kind of tie in this concept, this stuff is pretty important stuff. I mean, all companies, all businesses have ledgers, and they have to keep this stuff because it's going to be audited. And you have to have these official records just in case something does come up. So I always tell people, look, anytime something goes through a company, there's always a record. And, the companies I was at were very, very large, multi-billion-dollar companies, huge. And so, yeah, I think he had stole, like, I believe it was like over $100,000. He did it over 4 years. And of course, a company of that size isn't going to notice right away because that's not really a lot of money for a billion-dollar company. But the point is these ledgers, to understand the ledger, once it gets in the ledger, it's a record and it's in there. You can't erase it. And so it's there to stay. And so at some point in time, somebody may come looking at that account and do some either investigating or just to make sure everything's legitimate. It doesn't mean that you're looking for fraud, but there's always that attitude that you might want to watch. And then of course they would go back to the journal, and then from the journal, if they can't figure out what happened, then they would go back and see who created that journal. Okay, but that, Taylor, I don't know, does that kind of help a little bit? I know it kind of went more than what you'd asked, but
Yes, it did.
But to me, it's just because a lot of the stuff in this chapter is review, except for the journal ledger, because the transactions are the same. It's just this is how, I'm trying to show you today in this chapter 4, this is how a system works, and we're still kind of doing this manually. In the real world, what would happen is when we're in this journal, once these journal entries are automated or entered, typically they're posted automatically. There's nobody is sitting around hitting the enter button on your computer saying, okay, now let's post it. In fact, there's technology out there right now, and some of it, they call it blockchain technology, which is real-time ledgers and real-time financial statements. Literally, once something gets entered as a journal entry, it's literally posted automatically into the ledger. It's like real time. and it's really changing the way accounting works. This has come out in the last couple of years. It's changed the way businesses operate. It's changed the way they are able to get to the financial statements much quicker. They can make decisions quicker. But the nice thing about this that I'm going through today is at least I'm showing you behind the scenes, this is how it works, okay? So regardless of where you're headed, like with this class, and you say you want to go into accounting or you don't want to go into accounting, but as long as you have the knowledge and understand the basic concept, this is what you need to know, okay? All right, let's go to the next transaction. So now I'm on number 2. So again, I'll go through the journal entry. We'll do that, and then we'll post. I'm going to post as we go. So again, this is October 2nd. It says you paid the rent $4,000. Okay. Now on this one, you want to go and select the right account. So you know when they say paid, everybody should be thinking cash. And then of course we got something with rent. Okay. So the way we looked at it from chapters 2 or 3, it's either going to be rent expense or prepaid rent. I'll give you a choice. All right. So on this one, how many people think it's going to be rent expense? Anybody? I'm going to click that drop down arrow and see if I can find an account. I see a prepaid rent account, so they got that. And I see a rent expense account.
I think it's rent expense because it just say they paid it. They don't say
That's a good choice. Anybody else?
On credit or something.
Okay. Does anybody else think it's rent expense, or does anybody else think it's prepaid rent?
Mike is very muffled.
Mike?
Your microphone is very, very muffled.
Is it? Yeah, I think.
It's going in and out.
Yeah, I was having some issues. I think the internet's slow today, and I'm pretty sure I was having an issue getting on my Blackboard site today, and I think it's just a bad connection. And I'm pretty sure that's what's going on because it was moving real slow earlier. So if I'm in and out, there's not a lot I can do right now. My wife works at home, and so she's on the direct line, and I'm on the wireless line in the basement. So it could, and then I have an 8-year-old that's also virtual learning at home right now too. He's connected too. So it could be we've got 3 people on my Wi-Fi band, and it could just be a bad connection today. So I apologize for that. So I'll try to do my best.
You're all good. I think it's a rent expense though.
Okay. Okay. So I'll tell you what happens. Okay. So the correct answer that they want you to put in, I just want to get a couple of it. They actually want you to put prepaid rent. And by the way, that's going to be debited. And the idea here is that you're paying it at the beginning of the month. And so we did this.
Okay.
So we did this with my Monday class, and we all put rent. So we had more time. So we went along, we put rent expense in there. We debited rent expense for $4,000, and then of course we credit cash. And we did that. We went through this whole problem, and nobody said anything. And then we got to the end, and we did check your work, and it said it was wrong. And they wanted you to put prepaid rent in there. And the reason they want prepaid rent is it's an asset. Anytime you pay your rent, which typically you pay your rent ahead of time, that's called a prepaid. Any prepaid is technically an asset. It's a benefit to the company because you're able to use that facility, and it's actually not going to become an expense until the end of the month. All right. And my argument about this one is I don't want to touch it too much today. Eventually what's going to happen is we're going to take that prepaid rent in chapter 5 and we're going to convert it into an expense. So I kind of wish they hadn't touched the prepaids until chapter 5, even though they put those in there for now. But eventually what's going to happen is if you're thinking it should be rent expense, you're not too far off. Actually, it will become rent expense, but it will become rent expense once the time has expired. But again, that's a concept we're going to deal with in chapter 5. So for now, think of it like this. We just bought an asset. That asset's called prepaid rent. It allows us to do our business. We put it as an asset to prepaid rent. We're going to increase it by a debit. And then since we paid cash, we will credit cash. Okay. All right. So This is October 2nd. So now let's post this. So if I go into my ledger, we've got prepaid rent and cash. So I go to my ledger. I don't know what that is. Okay. So I would type in for cash, October 2nd. I put my posting. Here's my post. There's my $4,000 credit. And then I go to the prepaid rent. And again, October 2nd, I put that debit in, 4,000. And there you go. That's it. All right, let's go back to the journal, transaction list. Oh, and of course I didn't, I forgot to hit record. Let me do that real quick. If you don't hit record, it just erases it. So debit prepaid rent, again, credit cash. And then you get, don't forget, so this is a good thing. So when you're doing these homework problems, if you don't hit record entry, and then you go to the next screen, it'll erase it. All right, third transaction. Purchase desk and other furniture, $18,000. Received invoice for 60 days. So think for a moment. We got desk and office furniture that we just bought for $18,000. And it says receive the invoice and payable in 60 days. So can anybody think of an account, if we do our debits first, what account do you guys think should be debited? Any ideas before I check the list? Desk and office furniture.
Equipment.
Equipment, yeah. On this one, they don't give us any account that says furniture. So to me, the best account here would probably be equipment, office equipment. So we're going to be debiting that account because we're increasing and it's an asset. That's going to be $18,000. And then of course, does anybody know what account we are going to credit? Anybody? Any ideas on what we're going to credit?
Account receivable.
It's not receivable. It's going to be the other one.
Payable.
It's going to be payable. You're going to credit accounts payable because that's a liability. Remember, accounts receivable is an asset. So I put accounts payable, credit 18,000. I would click record entry, and then it's just going to take you to the next entry. Okay. And if you want to ever go back and review what you've just done, you just have to click that, and then it'll pop up. So if that's our journal entry, again, this is October 5th. I then go to my ledger. I'm looking for office equipment right there. I'd enter October 5th. There's my 18,000. There's my post. And then accounts payable. That's right there. I'd enter October 5th. Enter my credit, 18,000. And then there's my post. And you just posted your journal entry. There's your ledger account summary right there. Okay. All right.
So when I'm doing my homework, can I go back and forth like this?
You should be able to. Yeah. Yeah. Because what I did was I'm logged in just like a student would be.
Okay.
So basically this is, if I were a student in a class, this is essentially how I would be entering the homework problem right here. Okay.
Mm-hmm.
All right. Let's go back. So transaction number 4. Issue check for $4,100 to purchase art equipment. So now that we're on number 4, I'll just kind of ask the class, and we'll start with our debits. Any ideas on what account should be debited? Any guesses? Then here's the list.
Equipment is on debit.
Which equipment? Office or art?
Art equipment.
Art, very good. So debit art equipment, 4,100. And then somebody tell me what account would be credited.
Cash.
Very good, cash. There you go. So I debited art equipment, credited cash. Once I click record entry, it's going to take me to transaction number 5, but that's basically it. That's all you do. So if I hit record entry, and then I'll go back that entry just to make sure you see it again. Remember, this is October 6th. Now I go to my ledger account. I would enter October 6th. And then of course, cash would get credited for 4,100. And then art equipment, again, October 6th. Debit, 4,100, there's my post. And then that's how you do it. That's it. Notice at this point, we've got 3 postings to the cash account. The ledger right now has summarized 3 postings. We have an investment, and then we had 2 credits. Right now, if you stopped and you looked at your ledger, you'd say, what's the balance of cash? Your ledger would say your balance of cash is $61,900 based on these postings. Your balance for prepaid rent's $4,000 and so forth. So this is the benefit of a ledger. The ledger shows you what's happening in the individual accounts. Okay. All right, back to the journal. Let's go back to the transaction list. This is number 5. Purchase supplies, paid with the check, $1670. Somebody tell me, we'll start with our debits. What account would we debit? Supplies, very good. $1670. And then what account would we credit?
Cash.
Cash, very good.
And if you don't hit record entry, it's not gonna save, is it?
Yeah. If I just did this and then I went to the next transaction, or if I went to the ledger, it's just gonna erase it. So you gotta actually hit record entry, and then notice it bumps me right up to transaction number 6. So if I go back, I'm just clicking these buttons over here. So if I go back, this entry has now been recorded in your journal. In fact, if I want to say, they've got the thing where it says view journal right here, this box. If I click that, this is all the different transactions that we've just recorded. Okay. So just to kind of pause for a moment, again, here's our journal. Notice the journal has everything's in chronological order by date. You've got the debits entered first, then you got the credits. Notice as your debits equal your credits. But this is just how a journal, this is the format of the journal. This is how an accounting system typically wants a business to act. This is how they like to record information. Okay. So this is our journal. And then this is the picture of the ledger. Now, I'll tell you guys, the ledgers that I worked with, at least on paper, didn't appear to look anything like what you're seeing right here. The companies I worked at, they had their own system software people. They bought some packages where they customized everything. And so we had account codes. You wouldn't just see something that says cash. There would be an actual number that's assigned to cash. Like on this problem, and they keep it real simple here, but you can see how it says account number 101, where that's account coding. Because typically when you're using a computer system, that's just how you enter information into the computer. Our codes were a lot longer than just 3 digits. And so it took a while to get used to the coding. I call it the account coding. And sometimes it takes a few months just to learn because this one's pretty easy. Accounts receivable, 111, that's an easy number to remember. But what if you had 4 or 5 different account receivables? You'd have to know the different account numbers. So lots of times in the accounting departments, it takes a while just to learn the code, the numbers, so that you know what you're looking at. But very rarely would you just open a ledger and is it going to say cash? It'll probably just come up with the account number. And that's just part of the learning process. Okay. Back to the journal. Let's take a look at the transaction list. We're on number 6. Again, I'm just kind of watching my time. So I'll probably get through at least maybe half this problem with you today. I don't want to do, I've already actually illustrated this problem in Blackboard, so you can go and watch the video. But I do want to show you another problem on how to do a correcting entry. So I want to make sure I get through that today. So let me do a few more of these. And then if there are any questions or if anybody doesn't understand, just let me know. I'm pretty confident if there's nothing, I think you guys can do these. So this is transaction number 6. And notice the date's October 10th. It says we issued a check, $800 for cleaning service. So let's start with our debits. Any ideas on what account would we debit? Anybody?
Office cleaning services.
Okay, it's going to be an expense, but you're pretty close. Yeah, it's going to be office cleaning expense. That's going to be debited. We put 800 debit, and then everybody, what are we going to credit?
Cash.
Cash. And you do that once you hit record entry, it'll record it. So hit record entry.
I don't know if it's just mine, but you going in and out like it's splattering. Like
You don't have you don't have these tabs right here at the top on yours?
no, it's your mic.
Oh, it's my mic. Oh, I'm sorry. Yeah. I don't know there's much I can do about that today. I think it's a bad connection today. Sometimes that happens. Again, I apologize. As you work these this week, if anything comes up, just email me and I can work with anybody individually, or I'll just keep reminding you, I do have all these recorded in Blackboard already. Just go to, if you go to the learning modules in Blackboard and open up the chapter 4 homework video, and I've got all these explanations on there as well. Okay, just in case something happens, and if I get kicked out of the internet today, if you can't get back in, again, I think it's just one of those days. Sometimes that happens.
If you unmute yourself, you can hear him a lot better.
Does that work, Mike?
Yeah.
Yeah, I mean, if everybody wants to just unmute, just do an unmute. In fact, I think I can even do that. Yeah, I think you can unmute yourself. See if that helps on hearing my audio. Okay. All right, guys, so let's do a post. So let's post these. So office cleaning expense, 800 debit. So I would go to the ledger, looking for office cleaning expense. I'd enter the date. And then it was a debit of what, 800. There's my post. And then of course, cash gets 800 credit posting. And again, I believe that was October 10th, right there. And that's it. All right, let me do a couple more of these. And then again, I want to show you guys how to do a correcting entry. So this is the 7th one. Transaction number 7 on the list. It says, perform services for 4,200 in cash and 1,800 on credit. It says, no, use a compound entry. So remember, a compound entry is where you have at least 3 accounts affected. So we'll either have 1 debit and 2 credits, or 2 debits and 1 credit, but we're going to have multiple debits and credits, more than just 2. So we know when it says perform services, everybody should be thinking that's revenue. And we've got cash revenue and we've got credit revenue. All right. But again, they want our debits first. So can anybody tell me, give me at least 1 debit? What's 1 account we would be debiting? Anybody?
Cash.
Okay, so cash, that'll be for 4,200. And then do we have another debit? Anybody? Do you think we have another debit?
Yes. Accounts receivable.
Very good. So 2 debits. And then of course, the credit would go to what? Fees income. We've done that before one already. Do they have a fees income? It was right there. And of course, that's going to be for $6,000. So that's your entry right there. That's called a compound entry. So notice in this problem, we've got 2 debits, debit cash, increase of cash, debit accounts receivable, increase accounts receivable. So that's a total of $6,000. And then the offset goes to fees income, which is your revenue. So notice you got your debits still equal your credits. Notice that fees income is the revenue account that they want you to use. Once you do that, you then hit record entry. And then let me go back. And again, at that point, then you could do the post. Okay. So if I went to my ledger, we'd have a post. I'll do these one at a time. Cash is 4,200. That's a 4,200 debit. And again, that was on the, what, the 12th. So they want you to enter the date. So there's October 12th. And then we'd have receivable at 1,200.
You organize your things. We're going to that.
1,800, I'm sorry, 1,800 debit. Again, you say October the 12th. And then fees income gets a $6,000 credit. And again, there's the date, which is again October 12th. All right. So to recap this one on this entry, we've got 1 debit here. There's the cash. There's the other debit to accounts receivable. And then of course, the third one was the credit to fees income. Now, if I paused right here and we stopped and maybe a question said, what would be your cash balance in your ledger? Your cash balance right now would be standing at $65,300. That's the balance, which consists of 1 debit here, 3 credits, and then another debit there. Okay. So again, the benefit of the ledger is that you can go to any account and figure out what's going on in that account. And then if there's ever a question or something you're questioning, you could say, well, I don't understand what created this 4,200. Well, you could go to your ledger, you'd find that 4,200. You say, well, this happened on October 12th. You could then go back to your general journal and trace that transaction back to your general journal on October 12th and start there to see what created that entry. And that's typically what happens a lot. So we go to October 12th, and of course, you'd see this is what created that account, or that transaction. And then if you had further questions with it, you could then take it from here and go back and go look at the working paper documents, the invoices that actually then created that. Okay. All right, so are there questions on what I've shown you so far, just as I'm recapping this, in terms of the differences between the journal or the ledger, or does anybody have any questions on what they mean by posting? Because you'll be doing this week. This assignment, you got to get all these, you got 10 problems. They're not all like this, but you got 10 problems to submit by Sunday, plus a quiz. So that's what I'm asking right now. If there's no questions, I want to go to, there's another problem I'm going to show you where we're going to do another journal entry, but I'm going to show you how to do a correction. Okay. So this was, let me go back to the journal. This was transaction number 7. And in this particular problem, and this one was on October 12th. So as I pause this, so we were right up to this point. So there's still a few more you'd have to do. But again, you guys have seen, these are all review, but I'm just right now trying to show you, demonstrate what's in chapter 4, which is the journal to the ledger concept. So are there any other questions before I leave this particular problem? I'm going to show you another one, how you do a correction. Anything else before I leave it? Okay, if not, the other one I want to look at is right here. This is actually problem number 9. And in this problem, let's just read it. It says the following journal entries were prepared by an employee of international marketing company who does not have an adequate knowledge of accounting. So they give you these accounts. This is the journal. They give you the journal entries. And it says assume, they give you some assumptions. We'll get to that in a minute. But it says assume the errors are found and corrected on the last day of the month. All right. It says examine the above journal entries carefully and prepare the correct journal entry. So each one of these has been recorded incorrectly. And we need to go in, and they should have also said that they've been posted. You know, here it says, after the correcting entries are journalized and posted, what effect do they have on the asset? So the idea here is this stuff has already gotten into your ledger incorrectly, and we have to go in and fix it. So let's take a look at this first one. This is for the month of April. They debited accounts payable, and they credited fees income. And of course, the description says this transaction was performed services on credit. So after taking an accounting class and studying it, when you see a debit to accounts payable and a credit to a fees income, which is a revenue account, right away, something should look weird to you, because we don't normally do that. That's not something we normally do. But when they say perform services on credit, somebody tell me what's wrong with this transaction. Anybody? Yeah. That accounts payable should be accounts receivable. And so what's happening, let me illustrate this. What's happening is in your ledger, there's my T account, right now accounts payable has a $15,800 debit. That's not good. Remember, this is a liability. And the accounts receivable has nothing. So the fees income is correct. There's nothing wrong with that. They entered that correctly, but this debit is not correct. So to fix this, we have to take this $15,800 and put it into accounts receivable. And so what we would do, I go down to my journal. And so again, it says April 30th. So what we do is we would debit accounts receivable, credit accounts payable for the $15,800. Now, once we do that, let me record entry. Let me look at this again. So let's look at the journal. So once we've done this, this is our entry. Now what would happen is once we posted this to our ledger, Let me draw this up again. What would happen is this accounts payable, which had 15,800, once we posted this amount into the ledger, it essentially is going to wipe out that amount. So right now we just fixed it. And then of course your accounts receivable would then have that debit of 15,800. So again, I'm just trying to show you side by side here. This again, this is my version of the ledger. Once we record and then post to our ledger, this entry, this is called a correcting journal entry. It's going to fix our ledger. Okay. Any questions on that? Or I just showed you.
Would you have to go in and change the fees income as well, or is that already correct?
That one's correct. That one's correct. And sometimes you don't catch all the mistakes right away. And in fact, if they didn't catch this mistake, eventually when we get to some of our financial accounting ratios, accounts payable, which is a liability account, that could affect our balance sheet. Our balance sheet numbers would be wrong, and that could affect our information. We would be preparing an incorrect balance sheet. So notice, let me go back to this problem, back to the transaction list. Notice that on this first one, our debits equal our credits. So we're balanced. But just because debits equal the credits doesn't mean that there could be a mistake. And this happens a lot. So don't think that everything's great just because the debits equal the credits. Sometimes you have to watch, so what are you debiting and what are you crediting? Because again, once these get into the ledger, that could have an impact on your financial statement. Look at number 2. It says debit cash, credit telephone expense. So if I stopped right there, we've never done that, right? That's weird. Right away, something looks bizarre about this one. And then the description says, paid for the March telephone service, check number is 1917. So what we have to do here is we got to fix this. So this one, they debited cash when they should have done what?
Credited.
Should have credited. They credited telephone expense when they should have debited it.
Debited.
So the way we're going to have to fix this one is, again, let me illustrate this. So what would happen, let me get my stylus closer to me. So what would happen, all right, so you've got cash and you've got your telephone expense. All right, right now you have a $600 debit to cash and a $600 credit to telephone expense. So the way we're going to do this is, well, there's a couple ways, but if we just essentially reverse this entry, we're going to have to debit telephone expense and credit cash. But what would happen if we did that once? So if we went down to our journal, and let's go back to this one. So if we did this, so if we said, okay, let's debit telephone expense and let's credit cash for 600. If I did that, and then if I posted that, what would it look like in your ledger? So if I did that once, we would now have 600 there and 600 there, but right away, hopefully you can see that that just erased the original transaction. So what we have to do here is we have to actually enter this again. So you could either do 1,200 as one entry or do 2 separate entries. So if you wanted to, you could just do another debit to telephone expense and then another credit to cash for 600. Whoops, my thing. There you go. 600 debit, 600 credit.
Will we have to do it twice on each one of them that's messed up?
No, not always. In fact, I would even say if you could do this for 1,200, one entry, and then that would fix it, wouldn't it? If you just said debit telephone expense and credit cash for 1,200 and then posted it, the effect here is that what you want is you want cash to be 600 credit and you want telephone expense to be 600 debit. That's the end effect of what you want to happen. So you either record it twice or you could just do one entry for 1,200 like that. Okay, but in any case, I believe they want you to do it twice. So if you did it twice, let me go back. So that would be 600 there, and then that would be 600 there. Okay. Then of course hit record entry, and then I'll view my journal, and that's essentially how they want you to do that correcting entry. Okay. So let me go back up. So this is all you're doing, and there's a problem is they're having you analyze entries that were entered incorrectly, and they want you to then go in and then fix it. Okay. Questions on how to do a correcting entry. I think the rest of them you can handle. Another one, this one says purchased a file cabinet and office supplies, and it says assume that office equipment and office supplies were recorded at the correct values. However, the items were paid for entirely in cash and not credit. So on this one, the problem there is it should not be accounts payable. It should have been cash. So if you were to fix this last one, it's got a credit of 9,100. Of course, what would you have to do to accounts payable to get rid of that? Anybody? I know I'm getting low on time here, so that's why I'm just kind of hurrying up on this one real quick. So how would we fix that one? Well, we'd have to what? Debit accounts payable.
Telephone service. Oh,
Well, what they want you to do is you either debit accounts payable and credit cash
okay.
for $9,100. And that would fix that entry right there. And then of course you'd hit record entry. Okay. All right. I know I'm about a minute past my time here, but you've got my Blackboard recordings you can look at. I'm still going to hold the due date of being this Sunday, October 11th, for both Chapter 4 quiz and homework. And if something happens during this week, even before our next meeting on Monday, and let's say we come in on next Monday, which is October 12th, and half the class was not able to complete the assignment or there was an issue with it, we can talk about it then. But for now, I'm still going to leave the due date up. My plan still next week will be to get into Chapter 5 on Monday. But again, try these problems, go into Connect, try your homework, submit them, try your quiz, and then if there's an issue with them, please just email me and then let me know. Okay. All right. I apologize about my connection today. Again, my computer was running slower with my internet connection, and I do believe it's just a bad connection today. But in any case, if you have any questions, let me know. Don't forget, we've got the tutoring service too. You just have to book an appointment with that. So, all right. So I know some of you may need to leave. I'm 2 minutes past my time, but any final thoughts or questions
I have
today?
a question.
Yeah.
Right after the office equipment, office supplies, the account payable, I guess, see, that threw me off. I wouldn't have known that I would need to do that because it's not numbered.
You're right. So do you see it right here on this, where it's in, well, let me go back. Let me make sure everybody can see this. Do you see where it says, assume office equipment and office supplies were recorded at the correct values? And then it says, however, the items were paid for entirely in cash, not on credit. They're telling you that essentially that accounts payable should be cash, not accounts payable. So yeah, they didn't put, I wish they had a better way of linking it to that transaction. But that's essentially, they're telling you right there, that's the problem with this transaction, is that should have been a cash payment, not on credit. Okay. Does that help?
I kind of barely heard you.
Okay. Well, practice these and watch my other video recording on this as well. I think I've got some explanation to it as well in Blackboard as well. So again, if you go to, let me go back. If you go back to Blackboard and go into the learning modules, go to Chapter 4 module.
Friso needs to mute his mic.
You want me to mute that for everybody? Who's ever, okay, I just muted it. All right. So again, if you go into Blackboard, here's my video I've linked. No, it says Chapter 4 Homework Illustration Connect. I've commented, I try to do some comments on every single problem that you got to work and Connect as well. So that could be another resource. And then if you just get stuck on something and you're not comfortable, just, send me an email and I'll get back to you individually on that. Okay.
Okay.
All right, guys, final thoughts. Anything else? I still got a few people left. Anything else that I can help anybody with before we leave this class today? Okay. So, due date this Sunday. Try to get your Chapter 4 homework, Chapter 4 quiz submitted. If there's any issues at our next meeting, I'll start on Monday to see what other issues are there before I proceed. And then if there are not, then we'll proceed into Chapter 5 next week. So, but again, don't worry about, I'm just, giving you guys what's going to be happening next week. But this week, just focus on Chapter 4, do your best. And something comes up, let me know. And then we'll deal with it individually or even collectively as a class if it's a class issue with anything in this chapter. Okay. All right. Anything else before I wrap this up? I know I've got a few people left. Anything else from anybody? Okay. Awesome. So I'll stop it now and then just email me and then I'll send out a couple more announcement links for next week. And just good luck with it. And then see you guys at our next meeting.